dear participants, and fellow colleagues. Good morning, good afternoon, and good evening, and welcome to our third session of our joint 2021 webinar series with UNCTAD on entrepreneurship and MSME resurgence post-COVID-19. Today's event is entitled Entrepreneurship and Fintech, featuring an exciting array of expert panelists. Without further ado, I would like to welcome Ms. Tatiana Krylova, Head of the Enterprise Branch, Division of Investment and Enterprise at UNCTAD. Dear Krylova, I wish you welcome.
Thank you, Julia. Distinguished panelists and participants, dear Mr. Mayor, dear colleagues, I'm very pleased to welcome you today to this webinar number 7 under the overarching theme, the role of entrepreneurship in post-COVID-19 resurgence. The topic for today's discussions is the role of Fintech in the MSME resurgence. In previous workshops that we conducted throughout several months, we discussed how the role of entrepreneurship in COVID-19 resurgence can be enhanced by such means as digitalization, building resilient and competitive SME sector. We also discussed inclusive entrepreneurship and how it is economically beneficial for companies to tackle social and environmental issues, and how it is socially beneficial for governments to give all people, regardless of their background, age, or gender, an equal chance to exploit opportunities to create sustainable businesses. And we also discussed that this all is most relevant in a time of crisis, such as COVID-19 pandemic that we all are experiencing today. So today's topic is another highly relevant topic, as it combines issues related to technology and financial services, two areas that are the core of entrepreneurial ventures. Fintech, or the digital revolution in financial technology, is at the heart of any enterprise operation, which has opened opportunities for entrepreneurs to leverage technology to deliver services and access resources more efficiently, and to also facilitate financial inclusion. In this regard, I would like to mention that the report of the United Nations Secretary General's Task Force on Digital Financing of the Sustainable Development Goals also highlighted the opportunities presented by FinTech to accelerate financing of implementation of Sustainable Development Goals. So this rapid development is still ongoing and has accelerated with blockchain technology, the rise of big data, and of course the current COVID-19. Fintech has changed the ecosystem and made it more complex and decentralized. It has reduced costs of financial intermediation, but also increased competition among service providers. There are more organizations involved now, and information does not come only from credit bureaus, but social media as well, which allow peer-to-peer lenders to compete with traditional institutions, and mobile devices can now support every process in the back end of financial services. As we have an opportunity to discover with our panelists today, FinTech includes various applications of blockchain technologies, new digital advisory and trading systems, artificial intelligence and machine learning, peer-to-peer lending, equity crowdfunding, and mobile payment systems, among other critical issues on how to leverage FinTech to facilitate development. So these developments, they have implications for all stakeholders, including financial institutions, regulatory agencies, international organizations, among others. And of course, they are key factors, or the key factor, a key factor that could help to facilitate resurgence in the MSME sector. So this quick development of FinTech, however, has also increased the importance of financial education. FinTech has lowered the barriers for financing and investment, but it is useless without basic understanding of the fundamental aspects and risks associated with the use of financial instruments. Business opportunities made available by FinTech will not be materialized without increased financial literacy of the users, which is particularly lacking, as we all know, in the MSME sector. Likewise, regulatory environments involving financial sector and information technology government agencies must become more and more sophisticated so as to maximize the benefits of FinTech for consumers, for companies, but without jeopardizing their security and security of users. The widely shared welfare benefits that fintech can bring ask for changes in existing policies and regulations to achieve its full potential. Identifying and sharing good practices, addressing challenges is also critical to facilitate the process, and we're really pleased to be able today to provide such opportunity to you through the joint initiative with the UNITAR. So this series of workshops are organized by UNCTAD jointly with UNITAR towards implementation of the project called the Global Initiative towards post-COVID-19 resurgence of micro, small and medium-sized and medium enterprise sector, or SME Search project. This project is one of 5 projects launched by United Nations as part of its framework for immediate social economic response to COVID-19. The project is being implemented jointly by UNCTAD together with all regional commissions of United Nations and DESA. It aims to strengthen the capacity and resilience of SMEs in developing countries and economies in transition to mitigate the economic and social impact of the global COVID-19 crisis. And of course, within this, the discussions today are critically important. And we are also very pleased due to this project to be able to deliver this workshop not only in English, as we did last year, but also in French and Spanish. So in concluding, I really would like to thank panelists and participants to join this event today and for willingness to share your expertise with us. And I also would like to thank again UNITAR and Alex Meyer for this excellent cooperation. Now it became a long-term experience, and we look forward to our further cooperation in this regard. I also would like to again remind that this is a series of webinars. This is a webinar number 7, and there will be number 8 webinar, which will take place on May 27, also on at 3 p.m. To discuss the importance of blue economy for the post-COVID-19 MSME resurgence. So thank you very much, and so I hand it over to you, Julia and Alex. Thank you very much.
Thank you very much, dear Ms. Klivar. Without further ado, I would like to invite Mr. Alex Mejia, the Director of the Division for People and Social Inclusion at UNITAR, to the floor. Dear Mr. Mejia, the floor is yours.
Thank you very much, Julia, and thank you, Tatiana, for this most excellent introduction. Before we get down to business, as they say, I would like to explain to all of you watching these deliberations from around the world that the first boss that we had, the late Kofi Annan, the Secretary General of the UN, used to say that there is one UN, not 27 UN, one United Nations organization. And what he meant, Tatiana will remember well, what he meant is that all United Nations entities, regardless of the focus, the mandate, and the mission that we all have to work together. And today here you have an example of that, of one UN working towards hopefully what post-COVID, the post-COVID world will be. So I echo Ms. Krylova's words, correctly so, with this impetus, this priority that we have in trying to bring resources to you, to empower you, to share information with you, so you can indeed join this recovery that the world needs to start very, very soon. So thank you for that introduction on behalf of UNCTAD, and now on behalf of UNITAR, the agency that I represent, and on behalf of Mr. Nikhil Seth, my Director General. Let me give you a short introduction to the topic, very, very shallow. I don't want to steal the thunder of the speakers, but if Julia, if you can help me with the next slide. Actually, yes, before with the agenda, I failed to mention, and I will introduce each one of them in detail, that we have very prestigious speakers that actually know what they are going to tell you, from the UK, from the US, from Italy, and also very importantly from Switzerland. So this conversation will be structured in 2 parts, the first 2 speakers and then a Q&A, and then the other 2 speakers and the Q&A. Now we have several logistical reasons for that, but I will remind you very importantly, that there is indeed a translation, as Tatiana just mentioned at the beginning. You can go to the bottom of the of your screen and simply click at the bottom there that says languages. So with that, let me go back to the presentation and briefly introduce the concept of fintech that perhaps is new to some of you. And I would like to do so by mentioning and paying tribute to the people that are suffering now, the people that have departed, and the drama that this has caused all around the world. As of last night, we had, yesterday actually, we had 142,238,000 confirmed cases of COVID and 3,032,000 deaths. This is something important to remember, so we can put in perspective what we are going to discuss here. This global pandemic that started as a health crisis became a social crisis, an economic crisis, and a crisis that have affected everyone, rich and poor, global north, global south, developed or developing country. There's no country that can say that the COVID did not affect them. And I mentioned this thing because we are going to talk about financial technology, fintech, and how it can empower small and medium enterprises, micro, small and medium enterprises, to be part of the recovery when the post-COVID era begins. But we shouldn't do that without remembering these numbers that you have ahead of you. These numbers come from the official dashboard of the World Health Organization. Our colleagues that are down the road here, literally 2 or 3 blocks from here, the WHO actually published these numbers, and I invite you to read the other things that they also published. Ron, if you can help me, there is something on this. So, Julia, let's go to the next slide and let's introduce the topic proper in a short manner. So, as you can see here, thank you so much. Entrepreneurship is very important. And even if this pandemic is having dire consequences, we must recognize that trade, investment, growth, and employment are all affected, and the crisis will have an impact on the achievement of the United Nations Sustainable Development Goals. When I was mentioning the concept of one UN, I can tell you, wherever you are based, whoever you are, our friend, dear participant, the United Nations has embarked in this long road until the year 2030 to achieve the Sustainable Development Goals, something that we call, or that is part of the Agenda 2030 for Sustainable Development. Every country of this planet of ours, every nation where you are, has committed to achieve these SDGs by the year 2030. And part of that commitment is to facilitate political inclusion, economic inclusion, social inclusion, and the like to whoever. So when we talk about micro, small, and medium enterprises, this is for you. These SDGs, the Sustainable Development Goals that I'm mentioning, are for you, and we invite you to learn more. If you don't know about it, just Google it, the Sustainable Development Goals, and you'll see why the 17 goals, by the way, I have behind me, at least you can see in part, are a roadmap, a global roadmap for development, for the fight against poverty, to make our world better. Very good. So what we are postulating here is that fintech, just to give you a very brief definition, very basic as I say, is a catch-all term for any technology that's used to augment, streamline, digitize, or disrupt traditional financial services. At its core, fintech is utilized to help companies, business owners, and consumers to better manage their financial operations, processes, and lives by utilizing specialized software and algorithms that are used on computers and increasingly smartphones. This is powerful. This is not only transforming our world in terms of inclusiveness, empowerment of the youth, real-time information, mobilization, and so on, but also in facilitating our financial life. If you are a small, micro, medium entrepreneur, you know what I'm talking about. You need to be to have these tools in your hand with your smartphone or your computer. But the problem, and you'll see this in a slide that is coming, is that more than 40%, this is numbers of 2019, according to the World Bank, don't have access to all these technologies that can indeed help us. So we do have a problem and we have to talk about it. In addition, Fintech creates new markets and disrupts incumbents in the finance industry by expanding financial inclusion and using technology to cut down on operational costs. Next, please, Julia. So, understanding Fintech. This term can apply to any innovation in how people transact businesses, from invention of digital money to double entry bookkeeping and so on. Since the internet, not so fast, Julia. Since the internet and the mobile internet smartphone revolution, financial technology has grown explosively. You're going to hear from the speakers very soon. Fintech, which originally referred to computer technology applied to the back office of banks only, or trading firms, now describes a broad variety of technological interventions into personal and commercial finance. Examples, just to put this in perspective, of a variety of financial activities that you know, perhaps you didn't know the term, but you have used these things more surely, are money transfers in the developing world. I come from Ecuador. In Latin America, Western Union has been the powerhouse, mobilizing hundreds of billions of dollars to Latin America from developed nations through remittances from migrants and so on. So money transfer uses Fintech. Also, another example, when you deposit a check with your smartphone, you're using Fintech. When you apply for a credit, you do that. When you raise money for a business startup, that's Fintech. Or even at the highest level, where you are managing your investments without the assistance of a person, everything with private banking as well. Next, please. To conclude, in simply introducing this, there are several advantages of Fintech for entrepreneurs that we have to highlight. Number one, larger financial inclusion by increasing access to the financial sector using low-cost alternatives. And I emphasize that, and that will be part of the discussion today, how to lower the transaction cost to use Fintech. The idea is to serve the most vulnerable segments of the population, and as I have said, particularly from the point of view of UNCTAD and UNITAR, to empower them for the post-COVID recovery, micro, small, and medium enterprises. Financial technology or Fintech companies began to emerge as a result of the deficiencies of traditional banking, offering competitive value propositions, simplifying with technology access to financial services our lives through investments, remittances, savings, and the like. Today, with the COVID-19 pandemic, Fintech services are becoming the engine that reactivates the economy and that are accelerating digital transformation. These companies that help us are reaching millions of underserved users. That is from the perspective of financial inclusion. We will talk about it when the moment comes. But these users need to have access to technology, which is another problem that we have been debating in these webinars. And as I said at the beginning, if you read the numbers at the bottom, the World Bank had estimated that by 2019 that 42% of the global population does not have access to a formal financial system. And that is a problem. Next, Julia, I think we are ready. And I will be very pleased to introduce our first panelist after this short comment. You are going to hear from Mr. Brian Shank, the first panelist, then from Ms. Audrey Celian, our second speaker. Then we will have questions and answers for a few minutes, and then from Ms. Viola Levelin and from Mr. Misha Tripoli right after this Q&A in the middle. So let me introduce properly the first panelist, Mr. Brian Shank. He is the Executive Director and co-founder of the Cambridge Center for Alternative Finance at the University of Cambridge Judge of Business School in the United Kingdom. Mr. Shank, it's a pleasure to have you with us. The floor is yours.
Thank you very much. Thank you very much, Alex, for that excellent introduction. Good morning, good afternoon, and good evening. It is my great pleasure to join this UNITAR webinar, Entrepreneurship and Fintech. I hope that everyone is safe and sound. At the Cambridge Center for Alternative Finance at the University of Cambridge, our mission is to create and transfer knowledge, addressing emerging gaps in the financial sector that supports evidence-based decision-making, with a focus on Fintech. So what is Fintech? We define Fintech broadly as encompassing advances in technology and changes in business models that have the potential to transform the provision of financial services through the development of innovative instruments, channels, and systems. As this rather colorful fintech flywheel demonstrates, a fintech refers to both a set of activities, including crowdfunding, peer-to-peer lending, digital banking, digital asset exchange, wealth tech, insurtech, and regtech, as well as the entities or actors that facilitate these activities, many of which have emerged outside of the traditional finance system. And fintech and other forms of digital financial services have long been regarded as holding enormous potential to widen and improve the access to finance for millions of unbanked and underbanked populations, especially in emerging markets and developing countries. Over the last year, in the face of a global pandemic, we have witnessed an acceleration in the pace of digitalization in financial services. Fintech firms have played crucial roles in providing critical support to life and livelihood in the time of COVID-19. Indeed, for extensive period of time, fintech and other forms of digital financial services have offered the only viable option for consumers, SMEs, and for entrepreneurs to make or receive a payment, access savings, get insurance, raise debt-based working capital, or equity-based venture capital. In this environment, evidence-based research and the collection and analysis of timely fintech market data become development imperatives. And this is because policy and regulatory decisions about fintech can have both short-term and long-term impact on economic recovery and growth, SME financing and entrepreneurship, gender empowerment, infrastructure development, sustainability, and financial inclusion. Next slide, please. We therefore collaborated with the World Bank Group, the World Economic Forum, and over 150 fintech ecosystem partners globally to conduct a rapid assessment survey of the impact of COVID-19 on the global fintech market. Supported by the UK Foreign, Commonwealth and Development Office, the survey captured data from 1,385 fintech firms operating in 169 jurisdictions. So how has COVID-19 impacted the global fintech industry based on this earlier evidence? Next slide, please. First, as you can see, fintechs are growing, but that growth is highly uneven across industry verticals and geographies. 12 out of 13 fintech verticals reported growth, actually, in Q1 and Q2 2020 compared to the same period in 2019. The digital payment sector reported a 21% year-on-year growth in transaction volume. However, digital lending firms reported an 8% year-on-year contraction in the total lending volume, a 6% decrease in the number of new loans issued, and 9% rise in default on outstanding loans. In terms of regional variations, fintech markets in MENA, North America, and Sub-Saharan Africa had an average growth rate of over 20%. In contrast, Latin America recorded a more modest 13% growth, but even slower growth was seen in Europe and the Asia-Pacific region. Next slide, please. Secondly, fintech in jurisdictions that have endured a more stringent COVID-19 lockdown measures also tended to report higher growth rates. For example, fintechs in high COVID-19 stringency markets on average reported a 14% growth in transaction volume, in contrast to the 9% reported by those in low stringency jurisdictions. Digital payment firms in high stringency countries reported a twice as high growth rate in transaction volumes than those operating in countries with less severe COVID-19 lockdown measures. Next slide, please. Thirdly, fintechs in emerging markets and developing countries tend to report higher growth rate than those in advanced economies. In developing countries, fintechs reported an average Q1 and Q2 growth of 12% in transaction volume and 50% growth in the number of transactions, more than the 10% and 11% reported by firms from advanced economies. Next slide, please. So why have fintechs been able to continue growing? Besides demand considerations, one possible explanation is their nimbleness and ability to adapt quickly. 2/3 of fintech surveyed have made 2 or more changes to their existing products, services, and policies in response to COVID-19, often in onboarding criteria and procedures, reducing or waiving fees or commissions for the customers, and the provision of payment easement. 60% of the survey firms reported launching a new product or service during COVID-19, with a further 32% planning to do so. These new features and services can include credit or microcredit facility, voucher system for SMEs, enhanced cybersecurity features, and helping the government with the disbursement of a COVID-19 relief fund or payments. Next slide. Thank you. But fintechs also face, the slide before, please. But fintechs also face significant headwinds in terms of operational challenges. Julia, the slide before, including the rising cost and external risks. And globally, fintech reports a 5% average increase in agent or partner downtime. Sorry, Julia, the slide before, I think you skipped the slide. Increase, yeah, exactly. So globally, fintech reports a 5% average increase in agent or partner downtime, and a 7%, as you can see on the chart, increase in the number of unsuccessful transactions. Their onboarding expenses have risen by 8%, and data storage expenditure has increased by 11%. Fintechs also reported an increase in risks, such as cybersecurity, which was perceived to have increased by 17% year on year. The survey also showed that the financial position of many firms have worsened during the pandemic, and indeed, more than half reported that COVID-19 has had a negative impact on their capital reserves, and 40% stated that their current valuation was negatively affected. Next slide, please. Another interesting finding was that fintech indicated that they need more regulatory support to meet increasing demand and tackle specific challenges relating to COVID-19. And for instance, around a third of the survey fintechs would require urgent assistance in terms of regulatory support for eKYC, simplified customer due diligence, regulatory support for remote onboarding, and streamlined approval for products or services. Only a small percentage of respondents indicated that they have already enjoyed these regulatory support measures in their respective jurisdictions, and more have indicated that they will need these more enabling regulatory measures for the longer term. Next slide, please. This survey also sought to understand how fintechs were currently utilizing or might need further future access to regulatory innovations, such as sandboxes, innovation offices, and hackathons or tech sprints. Overall, only relatively small percentage of surveyed fintechs have been admitted to a regulatory sandbox or are currently working with a fintech innovation office or been included in a regulatory tech sprint or a hackathon. However, the demand for this regulatory innovation initiatives were clearly evident, especially from fintechs in emerging markets and developing countries. Next slide. So these are some of the key findings from our fintech market assessment survey. And we are currently planning a follow-up research to conduct a full year transaction data from 2020, enabling a more robust and nuanced analysis. In last year, we also partnered with World Bank Group to conduct a companion, a parallel COVID-19 fintech regulatory assessment survey with more than 118 central banks and other financial regulators to understand how they have coped with the challenges brought by COVID-19 in terms of fintech regulation, supervision, enforcement, and regulatory innovation. Unfortunately, we don't have time to share those findings of that report, but I have included the download links for both reports for you to freely access and read at your leisure. Now, I hope you have found this presentation interesting and useful. Thank you very much for the kind invitation from the UNITAR, and I look forward to answering some of your questions later in the session. Thank you very much indeed.
Thanks to you, Mr. Shang. Very unique presentation that helped us to understand where easy that we are when it comes to fintech and the fintech companies. Very interesting to hear you about the regulatory framework needed, and perhaps we will discuss this as soon as we hear the next speaker. But without further ado, allow me to introduce now Ms. Audrey Selian, the Director of ARTA Impact, co-founder of ARTA Networks from Switzerland. Ms. Selian, the floor is yours.
Thank you very much, Mr. Mejia, and thank you to UNITAR and all associated colleagues for making this possible. I'm very grateful to be here. I'm here to share just a little bit about the experience from the ground of a private investor. Next slide, please, Julia. The goal of the presentation today was really just to share a little bit about who we are and why we're doing what we're doing. In any given market, there may be a handful or a few dozen or indeed some few hundred private wealth investors, private wealth funds and vehicles attempting to deploy capital on the ground, trying to do good with it. And the Global Impact Investing Network estimates that there are, this is actually a dated number, there's well over 1,800 such organizations managing at least $715 billion. And in some ways, this speaks to the surge of an emergence of business, positive business, that is defining what many of us believe will be the next manifestation of our capitalist system. We're transcending the old and coming into the new. Next slide, please. The issue is that typically we see massive replications of effort. We are a family office deploying early stage patient capital to mostly last mile service businesses in India. So India is the market we've been deploying capital in for 15 years. We have a portfolio of investments that look at the gamut of different sectors: energy, agriculture, skills training, health, etc. The way we do this is we aggregate our projects and we try to co-invest frequently. Now, there are many platforms, and you can see this mixed salad graph here, which gives you a basic snapshot of the hundreds of platforms that are doing similar work, all of them with an impact narrative or a development narrative, many of them adhering to the SDGs, and all essentially trying to affect the match between the money and the projects. And typically, however, what we create for the actual project owners on the ground is nothing short of diabolical. Next slide, please. If you look at the typical experience of a project owner, in this case, let's say it's this organization in red called Synergy, they will typically be signed up or have profiles on or be part of a network in all kinds of different websites and systems. And in each one, they're sharing different bits of data. So in some cases, it'll be individual personal data. In some cases, it will be about what networks they're part of. In some cases, it will be about their operations or their impact. You get the point that as this data travels across these systems, there tends to be a severe fragmentation. If we go to the next slide, please. Typically, across these networks, the data is not harmonized. And so what we have is a massive replication of effort and essentially kind of noise, as we would call it, the kind of noise that occurs from just too many systems having redundant narratives, all of them trying to cater to, again, their own small walled garden of investors. Next slide, please. This is where we decided to play. This is where we decided to enter. 12 years ago, we built an iteration of a platform which was expressly designed to manage the transaction costs of these investments. Transaction costs include discovery. Just going to find the projects for most private wealth holders requires substantial effort, and not every family office or fund will have, a team hired to go and do this work directly.
Hello, thank you very much. How are you?
And so
good, thank you very much.
In our case,
Not yet.
we set up a platform.
It's now for the age group of 45 and above, so we're waiting.
Thank you. So in our case, in our platform, we attempted to streamline all the projects we saw, all the investors we saw, all the service providers on the ground that we know over 15 years of effort, and to try to begin to make it a bit easier. I'll show you some snapshots of what this looks like. Next slide, please. Thank you. We had searchability of a pipeline, an ability to coordinate on due diligence, and ultimately APIs, those connective tissues, between different systems, so that this fragmentation we saw earlier may be addressed with some sort of data flow that allows us to see who is looking at what, where. And when these projects are, effectively running towards a specific finish line of an SDG, X, Y, or Z, we should know where the finish line lies. We should know how many people are also trying to do the same work as we. And the only way we can do this is to use the tools that technology affords us. Next slide, please. So I'm just going to show a few snapshots. This is just a dashboard. This is what a network administrator would see when they're curating 500 projects in East Africa across different sectors, for example. Next slide, please. This is what one would see as an investor looking at a pipeline, looking at projects listed with clear indications of what kind of capital they require, what level of capital they require, searchability and filters. Next slide, please. We have also provided kind of rich underlying project profiles, an opportunity to really convey to the extent possible with video and pictures and all kinds of supporting documentation, the story of what's being achieved on the ground towards any given SDG. Next slide. And we do also have a visibility on who else has done the due diligence. Who else has spent effort and time traveling to the field? I've done countless field trips in India, and I've realized every time that I'm not the first gringa to be showing up in the neighborhood. There's, 10 people who do the same field trip. Imagine all of them fly business class and stay at the Taj. When we add all that up, it's the costs, the transaction costs of our development work. And when the ticket sizes for micro SMEs or SMEs are smaller than $1 million, it starts to make a difference. Next slide, please. So this is just snapshots again of due diligence coordination. I don't have the time to go through the detail, but just to show you that it exists. Next slide, please. And we have made an effort to ensure that at every point, those who are using this architecture, because it is a software as a service, those who are using it can fully white label it and tell their own story. In this case, it's the Global Agribusiness Alliance that is showcasing a whole pipeline of agri-SMEs. In another case, it's an instance of COVID resilience businesses coming out of the West Coast in the US. The whole point is that the white label is complete. Next slide, please. And these are just the snapshots. There's one focused on health, all about health pipeline. There's one focused on East Asia in Korean language, looking at women-led businesses and North Korean refugee-led businesses. All kinds of pipelines exist. Our goal is to help capture them and find a way to make that cost of discovery and cost of diligence minimal through the use of fintech. So thank you very much for this opportunity and the honor of sharing our project with you.
Thanks to you, indeed, Ms. Eli. I'm quite interested to see this architecture, this platform, and what you can actually do to help micro, small, and medium enterprises seeking access to capital markets, technological support, and so on. I would like to open the floor for questions and answers. As you can see, dear participants, this is so far a combination of a presentation of what is happening with FinTech and FinTech organizations, and then on the other side of what's happening on the ground with, of course, the presentation that you just saw from Ms. Elian. So if there are questions, please let me know, Philippe and Julia. If not, I would like to ask the first one, which I briefly mentioned to Mr. Shan. Mr. Shan, will it be possible, while we continue reading what the participants are writing, will it be possible that you give us an overview from the point of view of the many government officials that have joined today, according to the registrations? What would be the proper framework that a government can facilitate? How can this diagnostic that you show us, impressive numbers, by the way, and data, how can the government create a proper framework for FinTech to advance? Please.
Thank you, Alex. That's a great question. So there's no, shall we say, one template applies to all, right? So each country have their own different circumstances. But from the experience that we have had in working with about 120 central banks and security regulators, capital markets authorities over the last 5 years, it is really important to take a step back and really think about how FinTech and protection of the consumers and different other regulatory objectives, right, could be balanced, because there's always a balancing act, because you, as a regulator, your first concern is always the protection of investors and consumers. But on the other side of the spectrum, you have to ensure you can provide an enabling regulatory environment to allow financial innovation to thrive. So the entrepreneurs and SMEs can really have different options to access, capital, to lend or to borrow, to receive payment. It's really a question of competition. So how do you balance, the different side of the, sometimes can be conflicting regulatory objectives? Then you really want to start with a few things in mind. One is you start with a framework that is suitable for your own country. What are the priorities and how to balance them? Second, we need to find more data, right? It's really about having an evidence-based approach, because without a reliable market data, if you don't know how many fintechs currently operating in your own jurisdictions, what activities they're carrying out, what kind of customer they serve, it's very difficult to make any informed evidence-based regulation or policy. So more data, more market monitoring activities will be helpful. And thirdly, as FinTech is transnational, is borderless, is happening at speed of light, the market is evolving on a daily basis, if not on a minute basis. It's really important, I think, for regulators to have a mind of innovation themselves. So regulators, in some cases, have to innovate in order to regulate. That means to think about building a market digital infrastructure, but also a regulatory digital infrastructure. How can regulators using more innovation, such as sandboxes, innovation offices I mentioned, but also subtech, regtech solutions, so they are empowered, right, using latest technology and blockchain and so on and so forth to effectively regulate and supervise FinTech. So those are some points we find has been helpful for countries, especially in emerging markets. Thank you.
Thanks indeed. I think, Julia, we just lost Miss Elian. I don't know if she's still with us, but if not, it's okay. I still have a second question that I just saw for you, Mr. Shang. Let me talk about fraud and corruption. It's unfortunately a fact of life, and the more technology we use, the more cybercrime that we see. Do you have any data, perhaps, or any sense of this problem growing or perhaps being stabilized? Is this a real problem for fintech? Thank you.
Yeah, I think that the issues of fraud and scams and also cybersecurity risk, right? Those are not new to fintech. You know, they long existed in the world of finance. But fintech can sometimes overcome those issues, mitigate those risks by providing, you know, transparency, by having a more sort of a robust multi-party consensus-based mechanism infrastructure, where without, in a trustless world, even we don't know each other, we can trust the code, we can trust the smart contracts, right? That can be extremely helpful. But technology and coding and digital infrastructure itself does not eliminate fraud. Sometimes it can exacerbate fraud or security risk, right? Especially when it comes to emerging areas such as DeFi, decentralized finance, in terms of different forms of digital assets and other activities surrounding, you know, Bitcoin and so on and so forth. Without adequate protection, I think some of the customers in emerging markets are being left behind, and regulators feel sometimes a little bit caught off guard, because how can a regulator regulate something that is transnational? So one thing that really caught me off guard last week is I didn't know that Nigeria is actually the off-the-counter trade for Bitcoin capital of the world, according to Paxful. Most of the, a lot more Bitcoin has been traded in Nigeria than any other country off the counter. So that really bring to the light, I think, the importance of data, more robust regulatory innovation, but also coordination among different regulators in a jurisdiction, but also regional efforts that bring in different stakeholders, the policymakers, regulators, academics, incumbents, and fintech, to come up with regional, national, and global solutions, because it is a global challenge. It is a great global opportunity for entrepreneurs, but everyone has to have a stake in it and really to work together to collaborate and find common solutions.
Very, very much so, and a very holistic understanding of this. Let me go to the last question. But first, I will read something that a participant from Kenya, George wrote. His name is James Kariuki, and I sincerely thank him for taking that. He says that social entrepreneur in a small holdings, agricultural holdings, in that sector, have difficulties accessing capital right from the fintech. He says our experience in Kenya is that mobile loans impoverish the poor with up to 400% interest charges on borrowers. They are basically silos driving the poor poorer. And I have heard this also in Latin America, the region where I come from. So the last question that I will present for you emanates from this, and is from a participant by the last name Santoso. Says basically, excuse me, Gitonga, does fintech is encouraging and or promoting innovation in general in an economy, or the contrary? So how does fintech encourages innovation, if I may?
No, that's great question. Thank you very much for the question. Now, I think as Tatiana actually said at the top of the webinar, right? There's a huge gap in terms of financial literacy, but also digital literacy, right? They both go hand in hand. I think financial literacy, well, that means, but for a lot of unbanked and underbanked people, sometimes without adequate financial literacy education, you know, probably people don't have the knowledge to distinguish the fact that having a credit is also means taking on debt. And we have seen a lot of reports, especially those by CGAP, I think a year before, to see high delinquency rate in peer-to-peer marketplace lending. A lot of people just borrow more than they can afford. Sometimes they borrow and for other users. So therefore, I think financial education, financial literacy is absolutely paramount. But at the same time, digital literacy is also important, because, you know, what is two-factor authentication? How can you protect your wallet, right? Those things about digital literacy and digital education is, I think, equally important. But eventually it's come down to the industry, the fintech, the big techs, and the regulators to really put in effort to think about the sustainability of the fintech revolution, because we see some cases in other countries where the fintech been growing exponentially, right? And the market collapse because the investors, consumers are not adequately educated, because the regulatory frameworks are not in place, because the regulation and supervisory structure are not robust enough to really have sustainability of fintech and make that work for the people, working for entrepreneurs and SMEs. Everyone should take a long-term view to really think about what kind of a digital market infrastructure, including key components of financial literacy and digital literacy, should be an integral part of it. Thank you.
Thanks to you. And just to wrap up, because we also know that you have to go. You see, at the United Nations, we see this conundrum from the point of view of supply and demand when we talk about financial inclusion. Yes, it's the empowerment of the individual that needs to know what is available for her or for him, is financial literacy, is access to microfinance and so on, but it's also, as you are describing, from the top down, this regulatory framework that needs to be virtuous instead of vicious, this understanding by fintech that there should not be exploitation. This is not just a business, it's a great instrument for development and so on and so forth. So there's still a lot to do when it comes to the bigger picture on financial inclusion, but particularly, as you have told us today, on a full understanding of what is the next step, what needs to be done when it comes to fintech. So I thank you, Mr. Sham, very much for this very unique presentation you shared with us, and particularly for your generosity to share the links where we can indeed get these publications. With this, I present our appreciation to you. I wish you well, and we will continue with the rest of the participants. Very good. So next in the agenda, as you can see on the screen, we have Ms. Viola Llewellyn, the president and co-founder of Ovamba Solutions from the United States of America. Viola, the floor is yours. Welcome.
Thank you so much, Mr. Mayor. It's really great to be here with everyone. And thank you, UNITAR, for inviting me. I have a lot of respect for the role of United Nations. And when I was asked to have this conversation with everyone, it was really about the role of entrepreneurs and small businesses in a COVID ramp up, a resurgence. Now, it's interesting, we're putting the concepts and the application of fintech within the mindset of a world that has COVID and it's going to get worse before it gets better. And I heard a very interesting comment a few weeks ago that has guided how Ovamba thinks about the world right now. And what I heard was that COVID didn't necessarily break anything, but it did show us what is broken. All innovators, especially within the fintech space, are looking for ways to make something better, more efficient, manage things. I heard wonderful references, Brian, to fraud and the fact that the digital environment eliminates paper in such a way that certain economic systems, countries, or even cultures that rely on confusion will not have that available to them. And that is at the very extreme end of what a fintech world looks like in a COVID resurgence, but that's another topic. But let me introduce myself. My name is Viola Llewellyn. I am the co-founder and president of Ovamba Solutions. Ovamba Solutions is a US-based company with a complete focus on emerging market and frontier markets, small and medium enterprises, specifically Africa in our particular case. And as I was looking at Brian's presentation, all the wonderful numbers there, it occurred to me that it would be very difficult for me to speak authentically to numbers that we've seen in our business because Africa is frequently undercounted. Our response to COVID in Cameroon particularly has been very different. But unlike other solutions, and I have not heard the word trade tech used, we consider ourselves to be a trade tech innovator. What this means is we look at financial inclusion from the standpoint of helping small and medium enterprises gain access to capital to buy and sell and manufacture goods. Before there was even COVID, it is a well-known fact, small and medium enterprises are the drivers of GDP, are the drivers of economies, are the creators of employment and opportunity and the productivity needed in an economic system to have that wonderful checks and balances against credits and debts. What is growing, what is not growing. And fintech has always been in and around all of these dynamics. We are a Sharia compliant version of an alternative trade finance that we created because of the SDG rules and goals around poverty. So because of COVID, we had, like many other fintech innovators, were already working on solutions that would naturally fit in a world that looks like the way it does now: digital engagement, digital delivery of products and services, and in our case, complete disruption of the customer. We went from being a B2B solution before COVID to becoming what we now call a B2E solution, business to ecosystem. The opportunity in a COVID world is to have innovations that resolve key areas where there are gaps, where there is a lack of connectivity between the tissue. Beautifully said by the previous speaker. I really like how she said that. But for us, in a COVID ramp up, we are looking to become more, have a bigger footprint in our market, have more connectivity, whether it's between APIs or cross-border trade and sales, and to create the technologies that develop the ecosystem to support what small and medium enterprises need to do as they take their role in a post-COVID world. I think I speak for majority of the people who do what we do. Listening to the United Nations, to the IMF, to the World Bank, and all of these large organizations, we take our cues from what you say, and we take our cues to innovate from what you tell us are the challenges, the opportunities. But the fact of the matter is, it is only within the everyday activity of innovation that we actually find the truth of what's really going on. So I want to take this opportunity, as I've done with other large global organizations, to tell you what is real and what is not, and in the context of a COVID surge. Expansion becomes difficult as a fintech innovator and a trade tech innovator, but that doesn't mean that we don't keep doing it. What we do is we switch and shift and pivot our focus. And for Ovamba, that meant going from just funding businesses with capital for trade and importation to looking at how can we assist policymakers to play their role in the entire ecosystem. And for Africa, that ecosystem is cross-border in nature and is globally facing in a way that we were not previously. So when you talk about fintech, most people think about payments, think about East Africa and all the great things that Brian mentioned as well. And we like to say, and I want people to really give consideration to, if you've got all these payments platforms, what are people actually paying for? And how can we help policymakers get distinct, clear visuals of what's going on with last milers, with those who are in cash economies, and those people who are exchanging products and services, trading fast-moving consumable goods in our case, and what is the economic data that comes from there to help policymakers make better decisions. Well, we help them with dashboards. We help them by showing them the relationship between the volume and the capacity of inventory that is being traded with small traders in Cameroon, and other parts of Africa, Ivory Coast, Egypt, where we are as well, and helping them with AI to give them an idea of what is the right policy support in order to drive better growth in those groups. What is the right policy support and the best advice to give to banks to prevent non-performing loans, which have a long-term impact. So if you think about what COVID has done and how the money that should have been disseminated through the banking systems to small and medium enterprises to help them over the gap that COVID created in disrupting trade lines, in disrupting customers and all of their business as usual, a lot of that money did not come trickling down the way it should have. having fintech organizations like Ovamba and others come together as a group to solve that and step into that gap would have been a very powerful way to deliver disaster recovery from an economic standpoint, and also from an ecosystem standpoint. So policy becomes really important for looking at what will happen when the next pandemic, which it will, before that occurs. How do we shore up businesses to make sure that their role in sustaining the economic structures is still there, and that their disruption leads to some sort of growth? After all, nobody wants to waste a good disaster. Now, the next thing that I think is very important for the role of fintechs and trade tech is debt reduction. And this isn't something that I hear about being spoken very often, but I did say earlier that many fintech and trade tech innovators had businesses that actually transition and work very well even during these difficult economic times. That's because being mobile app forward and being digitally led helps to bridge the next gap. It's not just the gap between people because of social distances, but it's really the gap that is created from cash flow management. And that was the first thing that we noticed amongst our customers. They no longer had the expectation or the projections for where the rest of their revenue was coming from, same as with banks. So Ovamba set about creating non-interest bearing revenue opportunities for banks by allowing them to license our products. Bank Partner, which does Sharia compliant funding in the form of a murabaha, so that trade can be done. But banks don't have the ability, except when they use our technology, to have direct relationships, let's say with Chinese suppliers of goods. But it means there's a new opportunity. It means that we need to drive manufacturing on the African continent to export globally. It means that trade tech and fintech can find other areas of manufacturing by which to apply their innovations to keep the engine running. By having debt reduction and technologies and innovations that look at ways to reduce poverty, we actually make our customers a much better base for business and revenue generation, and we end up de-risking them for banks who are not fintech innovators. Banks at this point, with the support of policymakers, should be aggregating and curating different products and services literally on the fly in order to respond to individual customer needs. Individual customers being those businesses who have a role to play in ensuring that the economy continues to roll or pivot safely. Now, the best thing to do, thank you, you're doing just fine, it's okay to move on. In order to help the governments to do that, I heard mention earlier from one of my esteemed colleagues on the panel that digital literacy and financial literacy are important. Well, ladies and gentlemen, there needs to be literacy for the government and the regulators and the policymakers who are not always able to keep up with the speed of lightning that is known as innovation. It's very difficult for regulation to outpace innovation. By having sandboxes and hackathons, we give a safe place for them to break things quickly and fail forward, which is quite a lightning rod of a comment. Again, another conversation. But they need to also change who they're employing within the governments to look at and interact with innovators. Some of the best systems in the world are those where leadership reflects and looks like their customer base or the citizenry. Well, when it comes to technology, I'm going to say things that might be considered politically incorrect, but it's very difficult for an 85-year-old leader to have any form of relationship with the bulge bracket of youth that are involved not only in innovation, but the use of these technologies. So we need to have sandboxes and ministries and departments that look like the users, and at the very least, have them being constantly educated. Ovamba, in partnership with the African Fintech Summit and the Daedalus Group headed up by Leyland Rice and other team members, have had sandbox conferences where we bring all stakeholders together to discuss either a proposed problem or a very real startup company that comes in to say, these are the problems that we've had. And in each case, we've noticed that many of these young fintechs end up having to piggyback on the licenses of other banks, which Ovamba has done as well. But that creates a wonderful opportunity to see why exactly is banking broken and why can fintech save them. And the answer to that, to the regulator, is because the digital innovations required to boost growth through difficult times like COVID-19 are not present, and policymakers still have not figured out a universal way or a continental way to ensure that all of the banks have that very magical thing, interoperability across different jurisdictions. So by having sandboxes to look at how IP can be protected, monetization, and how to bring these solutions through the pipeline of development, we will have a world where when COVID 20, 21, 23, and whatever come down the pike, we would have had enough practice under our belts to ensure that the engine of productivity for GDP has enough AI and practice to know how to move forward. Next slide, please. Key challenges and good practices. I loved when I was reading that, Philip, and you had talked about what the goals and takeaways of this conference were going to be. This is an inexhaustible list because the sharp edge of the sword of fintech and trade tech is that the more solutions you are able to identify, qualify, and understand, the more products you will create to resolve that. But that in itself tends to throw off more challenges to look at. So let's take a look at something else. I never thought that there was any relationship between healthcare and fintech before COVID, but my goodness me, the two are highly related in the same way that the world of global warming and the economic impact that comes from climate change are completely related. This means that the challenge and the opportunities here are the nodal connectivities between all of those things that are relevant. We can't exist in silos, and neither do these systems. They all interrelate. We need good infrastructure, not just in Africa, but we also need good infrastructure on a global basis by which to understand and operate with emerging market players. That means verbal computing. And in our case, it means natural language chatbots that allow the infrastructure of communication. We also need to be able to understand culture within investment and product development. One of the problems that we ran into when working with microfinance institutions in Central Africa was that the cultural responsibility of understanding how different groups work falls right down to where do you curate your technology? And this is why trade tech and fintech innovation is so exciting and so important. Majority of these banks are using technologies and systems that come from outside of Africa's borders and have got nothing to do with the individuals whose lives are affected by the approvals, disapprovals, and the rejections of their applications. So infrastructure and investment has a cultural role, and it is a challenge to bring that all into one place because not everybody sees the world that way and because of issues of interoperability. It's a good practice to be able to benchmark and deliver things that work and put it out to peer review in order for that to be disseminated throughout an economic system, or in our case, throughout the continent. A challenge also is taxation. It needs an overhaul. Again, a totally different conversation. But one of the things that really affects small and young businesses, and this was brought up by the other panelist who deals with wealth management, is that taxes, when not set to scale with the growth of some of these young businesses, or when you start to tax bloggers, as has happened in Tanzania, you start to really retard innovation. Innovation can be taxed, but it's got to be done in a responsible way. Otherwise, you retard the ability to come up with great ideas to solve huge global challenges and database challenges. So educating government officials should run concurrently with educating users and innovators and individuals that don't understand the advantages for them. In fact, I've heard it said that until the application of fintech or trade tech makes sense to the last person eating fufu in the back of their village, then it doesn't mean anything at all. Or if you cannot speak language, or if you're not functionally literate, none of these solutions mean anything to you. It's got to be accessible. We also need a full press commitment to digital transformation. During the height of COVID, when Ovamba took solutions from bank to bank to bank, we ran into the following issues. Number one, mobile wallets and digital currencies have a last mile hurdle to jump, in that many of these banks in our part of the world are not able to integrate that capital directly into bank accounts. There's still a transformational part where that digital currency has to become hard currency in order to get into a bank. There's also the lack of interoperability, and an issue that would be exciting to resolve, in that legally, many African nations don't accept PDFs and digital signatures as a legally binding element when doing contracts. So when you hear all the sexy talk about blockchain and smart contracts, we still have some last points to go. And it would be a good practice, especially in light of the African Continental Free Trade Agreement, to keep on looking at how to resolve these little tiny gaps in the entire continuum of our digital journey as Africans. I personally am very concerned that we will have issues relating to the new digital poverty and the digital divide during a COVID resurgence if we do not make education, and even a change to traditional education, one that has a digital element embedded in it, so that everybody has the democracy of access to understanding. Next slide, please. If I have a next slide. Okay. I actually do not know about capacity building programs, and that's the honest answer. That's because there are so many, and if you're not in the know, you don't find out. I was excited to hear about Nigeria and block currency clearing that was mentioned. I had no idea, and that's because in many cases there isn't the same level of attention, marketing, and discussion about what's going right in parts of the world where many people have enjoyed the lofty experience of being able to point at what is wrong. As I said at the beginning, COVID showed us what is broken, and our perception of who's innovating and where the value lies is very much chief amongst that. So the answer to this is capacity building programs are definitely going on. Last I checked, there were more than 448 hubs in Africa. That was the GSM report. And the last I also knew, especially with Ovamba, is we are building capacity through our authorized reseller program, whereby because we couldn't travel and because we wanted to help to build those nodes of availability of inventory, we've actually been taking on partners who are licensing Ovamba's technology in their markets and also using our technology to do their own direct origination with customers. Why is that important? Because we need the velocity of capital to continue in the machine, even though COVID has made growth very, very difficult. So if you're like us delivering growth as a service, we have to pivot and not only just have trade and funding and innovation sales, but we also have to take that whole B2E concept, business to ecosystem, and look at ways in which the diaspora and retail investment and other types of bond-based diaspora bonds can be used to bring to the bear when we sit down with policymakers, regulators, and central banks to say, look at what you need to understand about what's going on in your economy, and here is additional capital in order to ensure that these ideas and these investments are coming from a diversified base, because not only do you need to invest, that investment has to have yield. And if you can get that going, whether it's virtually, digitally, or through the acceleration of trade, then we're beginning to create the steps needed for us to survive a COVID resurgence and have a new economy that has been battle hardened because of the way we have addressed disaster recovery and economic recovery. So it's important to have that capacity in place as we go forward, as we take the lessons from this COVID-19 experience and use it to shore up and create strong economies that are digitally rooted and have fintech and trade tech as the front lights to light the way as to where economies are going when we give our users the democracy of access to opportunity. Next slide, please. We've been very excited about how we've used the United Nations to guide our growth as a trade tech innovator. We accidentally became a no poverty company by ensuring that people and customers who come to us for a transaction are able to be understood and scored based on risk. And if the transaction fails, because Ovamba is using a Sharia, which is highly ethical, a Sharia approach to funding, when customers fail to complete a transaction, we are able to just liquidate those goods on an open market because they belong to us. So we took that no poverty thing really, really seriously from the United Nations. And industry, innovation, and infrastructure, combining all of those into one space is what makes most fintech and trade tech innovators an ecosystem addition and not just something that is siloed in its own separateness. It's not just a payment solution. It's not just a digital wallet. There are so many of those. So I want to leave enough space and time for any questions. And I didn't want to use this as a soapbox for saying, hey, take a look at what Ovamba does, come play with us, come work with us. But I do want to make it very clear that so grateful to United Nations to give innovators like ourselves a platform to discuss how you shape us and how we deliver products and services to the market, but also how COVID has been a boon to some of us because banks who did not want to take the risk of digital innovation usually have had to wait for policymakers and central banks to kick and push, but some of them are beginning to listen and realize that it's best to fix the roof while the sun is shining and not wait till it's raining. And it is best to take a look at how AI can shape and bring culture into that space in order to create the right solutions for emerging markets so that they can take their place globally. This ain't your granddaddy's Africa is a comment I've often said. And that's not just about the outside world taking a new look at Africa through a digital fintech, trade tech perspective, but it's also a cautionary finger point to Africans and emerging market businesses to be very bold and realize that the globe is there for all of us. So thank you for listening. Between trade tech and fintech, I believe that we will be able to get majority of the human race over the COVID divide. And I look forward to questions.
Thank you, Ms. Evelina. Quite an inspiring presentation. For me, I had seen your website before, and I read some press releases and news about you and your co-founder being recognized and so on. Congratulations, you're doing beautiful work, empowering people. This is what you do, and you focus on gender is also very important. So from Cameroon, Ivory Coast, Washington, D.C., India, and I see how active you are. So we will have a couple of questions, but I need to go to our last speaker. So with your permission, let me introduce now, Julia, if I may, our colleague Misha from FAO, if you can go back. Thank you. And then we'll go back to the presentation. So Mr. Misha Tripoli is at
Excellent. Thank you.
Yes, it's an economist at the Food and Agriculture Organization. Yes, in Italy, a colleague of ours at the United Nations and an expert on this topic. So, Ms. Tripoli, the floor is yours. Thank you.
Thank you very much. I appreciate the opportunity to be here. Yes, so as mentioned, I'm working as an economist at the Food and Agriculture Organization, where we do many things, but one in particular is we analyze and inform and build capacity of primarily the public sector, but also we support the private sector on understanding opportunities and challenges for adopting digital technologies in agri-food supply chains. And so today, I will try and be very brief since I know we're running low on time. I will share some of our research on the opportunities of blockchain for digital finance in agri-food supply chains. Next slide, please. So very briefly, I will be just giving some best practices and focusing a little bit on how we scale up. Next slide, please. So first off, why is blockchain and digital technologies relevant for supply chain finance? Well, I like to first step back and look at some of the challenges, what we're really trying to look at here. One is legacy finance and trade are often well known for being complex, time consuming, and expensive. Financing the financing needed to execute a cross-border trade transaction is well known for their redundancies and their long payment terms, right? That's one that we're looking at. Redundancies in oftentimes in data, in the data, how it's shared back and forth. Secondly is insufficient traceability and transparency in food chains. Insufficient traceability, which impacts certainly consumers understanding where and how their food was produced, but also impacts MSMEs as well as smallholders who often do not have the track record to prove their creditworthiness, right? So that's another piece. And this is one of the reasons they often lack access to finance, either to mitigate payment risk or access credit to maintain their working capital or invest in their business or so on. Really, all of these challenges are related to insufficient means to sharing and verifying data. Next slide, please. Yeah, perfect. So blockchain is relevant for finance because it provides a secure platform to share data and optimize information flows in supply chains. And here are a few of the key features just to mention briefly. First is it helps disintermediate transactions, meaning that there's no central authority that maintains a ledger that clears and settles transactions, but rather a distributed, decentralized network that processes transactions in real time, reducing the number of intermediaries while ensuring trust in the database and the entries so that they're secure, traceable, and immutable. Also, they provide a platform to implement smart contracts to automate workflows and execute contracts. Secondly, they enhance traceability with higher quality transactions, which integrates data points along the supply chains, helping regulators and consumers know specific product attributes as well as production and market data, which can be used for proving creditworthiness. As a supply chain actor, transaction records economic and financial activity on the blockchain. That same actor builds an identity, which lenders can use to assess risk. Next slide, please. So if we look at the benefits for financial services, we see a sector which is typically well-known and burdened from numerous problems related to being paper intensive, depending on manual labor for generating contracts, documents, approvals, clearance, and settlements. But by digitizing the economic activity and supply chain workflows, such as contractual process, payments, documents, in combination with reducing the intermediaries in supply chains, blockchain and smart contracts can reduce the transaction costs, reduce risk for traders and banks, and bring greater efficiency. This, in theory, allows small, MSEs to build a track record from the data stored in their operations and the market activity to access credit, trade finance, for example, and other financial services that's needed. Digital finance comes in many forms, as we know, we've talked about now as the last presenter, really determined by the underlying technology. And some of these benefits are certainly in line with a lot of the hype around DeFi and decentralized finance, where decentralized networks, DAOs, decentralized autonomous organizations and smart contracts can automate financial services. Just to mention. Next slide, please. So blockchain-powered finance provides opportunity for more efficient and inclusive supply chain finance, which can be used to mitigate payment risk. One interesting example we'll piggyback on from the previous presenters, trade finance, where blockchain and smart contracts provide a platform to store all information, agreements and certifications in a single ledger and auto execute the settlement payments in real time upon delivery of good. This frees up cash flow and working capital for producers and sellers, helping them to better manage their business. Open account trade finance, which I believe is like 90% of trade finance. There's now platforms like well-known WeTrade, which can execute a transaction excluding shipping times, but all the documentary compliance and workflow, which typically takes up to 7 days, can now be done within 1 hour, which is just a huge efficiency gain. If we look at letters of credit, it provides a platform for instantaneous documentation flows between exporters and importers and the financial institutions in between. Also have been shown through different pilots and live services to reduce from anywhere from 5 to 10 days in typical documentary workflows up to 24 hours. So this really, as you can imagine, really reduces the length for payment terms, which is really important for businesses to operate effectively. It can reduce transaction costs. Has been estimated to reduce like 60 to 80% of operating costs in trade finance, helping exporters to save money, enabling lenders to supply more trade finance, particularly to underserved. Next slide, please. Great. Another interesting use case for blockchain and finance is in impact investing, right? So we have a growing demand around the world for businesses to ensure operations contribute to sustainable development. And the problem is oftentimes is really verifying that investments or business operations contribute to their intended impact. Are they really achieving what they say? Traditional models simply lack the means to verify that impact. So with emerging technologies like blockchain that again integrates traceable data points across supply chains, and things like tokenization, which creates the digital representation of tangible, but in this case, most interestingly, non-tangible assets, it is becoming possible to measure and verify impact in agricultural supply chains and link them to ESG investments. So this opens up new ways of incentivizing responsible agricultural supply chains in general, and also brings new ways for enterprises to monitor and verify compliance with things like responsible business conduct. So what is a tokenized event? Just for those who may not know, right? So you have a unique event. Unique events can be recorded on a distributed ledger or the blockchain as they happen, together with individual proof points that contribute to that unique identity of that event. And once recorded on the blockchain, the event remains unique, cannot be copied or tampered with. The event becomes, let's say, tokenized, meaning that it has a unique token that can be issued containing all the features of that specific event. And that token, once it's minted, released, it can be that information it contains can be traced and referenced on the ledger. So you could have things like deforestation-free chocolate, or specific, or decent wages for banana, workers, or so on. So this really allows the development of products built around event verification and to use the tokenized events as collateral in structuring financial products. Next slide, please. So we can look at we can actually link this with performance-based financial models that link impact to financial return, meaning payment depends on the measurement and the verification of its intended impact, right? So you have really a range. I'm not going to go through them all because of the time, but you have things like performance-based donations, where some or all the funds being released to the implementers is dependent on the achievement of those measurable impact results, I think is very, very powerful. You have other things like principal only, pay for success models, where if the intended impact is achieved, the borrower only has to pay back the principal. Other things like interest-bearing loans, and really a range from donation to much more traditional financial instruments. Next slide, please. Good. So how do we scale up? So I'll just say my last two slides just to talk a little bit. Really, the last presentation did a really excellent job, I think, of showing really a lot of what the challenges are and the role for the public and private sector to help scale these technologies. But here are a few additional ideas. So once the idea in the marketplace and the market potential for a product or a service is in place, it's important for entrepreneurs to have an enabling environment that attracts capital, that incentivizes growth, spurs innovation, and promotes the adoption of those services and products. And this is what we call, what people call entrepreneurial ecosystems, right? And so some of the components of this enabling environment, and have already been discussed, I'll just briefly mention, are things like, public policies, regulations, which we've talked quite a bit about, finance, which is huge, really, obviously for entrepreneurs and startups to grow and develop. So infrastructure has already been talked about. Things like human capital, we've already mentioned a little bit today. Strengthening all sorts of, education, digital skills, digital literacy, and so on and so forth. Digital preparedness, things like mobile and internet connectivity, as well as entrepreneurial culture, making sure that you can promote business development with incubators and having things like patent enforceability and so on. Next slide, please. So so what we've done is, in fact, part of what we've done in the Food and Agriculture Organization, we really understand the importance, and our role, our primary counterpart is really typically the ministries, the public sector. So we really understood the importance of assessing the enabling environment and helping, in our case, things that we look at, digital technologies, but ag tech in particular, how we can help governments and also support entrepreneurs in the private sector as a whole, to create an enabling environment that's really successful to adopting technology and contributing to business development. So we've conducted a few assessments actually in Eastern Africa, Uganda, Rwanda, and Kenya, where we've assessed the entrepreneurial ecosystem, trying to understand what the strengths and weaknesses are. And I thought, just to end today, to give some of the lessons learned from this work, which certainly contributes for those that are attending from the public sector, but also I think could be useful for entrepreneurs to keep in mind also. And so first off, it is the importance of bridging the middle financing gap for startups, right? So oftentimes in East Africa, from the work we've done, we've seen that donor funding is a common source of early stage funding in the pre-seed and seed rounds. The common challenge for the region startup community is a lack of bridge funding following this donor funding stage, which is really necessary to scale the business. So traditional venture capital industry that provides Series A and Series B funding is lacking and are critical in moving from a viable proof of concept product to commercial scale. So this is something to keep in mind. The domestic venture capital should also be a central target for filling this gap. However, it is important to ensure that policy objectives from governments are in line with incentives, right? Investment incentives. One common feature that we saw was that the domestic venture capital were lacking because more often there was more secure and profitable investment opportunities. So that really, was a contributing factor. Scalability is directly linked to also this middle gap financing. The basic concern is that the domestic market fails to provide the scale to make newly developed products viable. So it's really, important to think about how a product can scale. redundancy. Next would be education for the domestic entrepreneurs on common financing practices. We saw that redundancy to accept equity financing which highlights the need for education. It was one issue that came up quite a bit and really important so projects can go forward. Strong information sharing, data sharing can lower barriers of entry for startups. We found the opposite to be true with really, one example is no established farm database was one example which really, hurt some startups' ability to, or really added quite an additional amount of work for them to really enter the market and improve their concept. And lastly would be to ensure patent enforceability is really obviously a very important one. And I'll stop there. Thank you.
Thanks to you, Mr. Tripoli. Quite on point, and I appreciate the effort that you are having at the FAO. We will have some questions and answers at the end, and I would like to go back to a previous speaker on the first one, but before that, I want to echo two things. One that she said, and that one that Misha said. But first, with Ms. Leloui. You say the digital divide and digital poverty could grow in the post-COVID era. And this, of course, is something that we all understand is a real danger, that because of what has happened with the COVID, instead of building back better, as our Secretary General postulates, we go back not only to where we were with all the limitations, the shortcomings, and the discrimination that we had, especially when it comes to access to finance and digital inclusion, but that we go back to a worse scenario. So we actually go backwards when we have been advancing in the global sustainable development road and the path of the sustainable development goals. So I wanted to ask you, Ms. Llewellyn, how, in practical terms, you think this digital divide and digital poverty, especially in Africa, especially in Latin America, some regions of Asia, how can we prevent that? In practical terms, what should we do? Should we continue to educate in the way we do? Should we do something different? Is this mostly the role of the governments and the role of the civil society, or of all of us? Give us some ruminations on that, very shortly, perhaps 1 or 2 minutes. Thank you.
Who is supposed to answer the question?
That's for you, Ms.
Oh. Okay. I'll be as quick and as straightforward as I can. It starts by demolishing what exists right now. There are certain subjects that are taught in school from such an archaic standpoint that it makes the digital divide difficult in itself. So from the very beginning, we need infrastructure, and we need teachers educated to deliver subject matter within a digital format. We also need to be able to pony people up in different parts of the world where there is development that matches the same trajectory. So the digital divide is important to deliver by phones. Most Africans have more than one cell phone. Access to the internet is via phones, and therefore the data talked about it is not always quite contextual. But the digital divide means that we have to literally move people forward through how they engage with banks, how they engage with their doctors, and just put it into everyday life context with good addressing of fraud and cybersecurity. And it's a long answer, but it really starts with educating people at the very, very onset so that everybody's on the same platform.
Very much so, and it's one of the ways that we can indeed build back better whenever the post-COVID era begins. Now, to Mr. Tripoli, one of the participants, I guess you can also see some of those questions or comments, has two postings, Michael Lin. He says, who regulates the fintech organizations? Is it the central bank or fintech banks, presumably? Who else? But then immediately after, he postulates this question on data privacy, saying, is data privacy national regulator? Who regulates this? This changes with every country. Of course, we understand that. but data privacy and the fintech sector. So in your presentation, most excellent on supply chain finance, on how to use the ledger in a different manner, think out of the box, how to create this virtuous positive ecosystem that you described. Give us some comments on regulation. Who should regulate the fintech organizations, not to hinder them, but to actually empower them to become agents of change in society? Mr. Tripoli.
Yeah, thank you. I think that's an excellent question, important issue. I think that's in particular really a space for intergovernmental organizations. I think certainly it should be governments, and I think this is really the heart of what the United Nations is really all about. And this is really these are multilateral issues, and we have to develop multilateral solutions, I believe, to issues like data sharing and regulating fintech. So I know there's been already quite a number of efforts to do so on regulation, but it's still quite early, and this is something that's developing. The WTO, for example, is looking, I know, at things like ICT policies, e-commerce, agreements, and so on. And so this is sort of the beginning of finding, I believe, multilateral solutions to issues like data privacy.
Thank you very much. Let me ask you another question, and then we'll go to the last one for Viola. One of the participants asked how the blockchain finance, let me read it because it's not well written, but this is what it says. Social entrepreneurs in small holding agriculture endeavors have difficulty of accessing capital. So how does this technology help them to have access to capital? Can you give us some example?
Can you give me that question synopsis? The line is pretty bad, Mr. Mayor. I'm so sorry. Can somebody tell me what? I couldn't hear him.
Yes, and this one was for Misha, the one that I just asked on how to actually access capital from a micro entrepreneur in agriculture was for Mr. Tripoli. Then I'll go back to you, Ms. Viola.
Thank you. I'll try and make sense of exactly the question in terms of, I think that there's a lot of possibilities, and there's a lot of degrees of I think blockchain still is very much a futuristic use case. Certainly in trade finance, there's a lot of great examples of really live platforms that are doing so, and that have been quite successful, and with really the objective to help also small scale producers and traders. You have, again, a range of things I didn't mention in the presentation, but you have a startup called AgriWallet, which I intended to, which just uses a mobile network to promote financial inclusion, whereby where you have a buyer and a seller, and they have members of the network and a buyer and a seller, and they automatically provide capital, credit rather, to the seller, which is obviously a major issue for small scale producers of working capital, for their working capital. So this is really a lower tech solution that's already live and I think available. I think there's quite a bit out there. Yeah, thank you.
Yeah, thank you indeed for adding that example, very practical. Now, Ms. Lewolin, can you hear me?
Yes.
Very good. So let me ask you the last question of this very interesting webinar. It's also posted there, you can read it, but it says as follows. How do countries with poor internet connectivity and low bandwidth manage access to fintech? Or does it not happen, fintech? Fintech is not available in such countries. So can you give us your views, your experience as an African? What happens in countries that have poor internet connectivity?
I think I've understood your question. If anybody heard him, please repeat it. Alex's line is so crackly to me. Misha, did you hear his question?
I didn't quite get it. I'm sorry.
Yeah, I didn't. So let me see if I can approximate what you're asking me. You want to know how can people access our fintech solutions?
Where there is poor internet connectivity and low bandwidth.
Yes, that can be difficult. Technically speaking, when we first started, we looked at ways in which to use batch computing and delivery in order to wait till there was enough bandwidth for information. But right now, that's not an issue anymore. When we do the work that we do, we're offering both private and public cloud access. And November happens to have their own private, not public, blockchain. But in places where internet is not easily available, even using simple platforms as voice computing over WhatsApp or Facebook or anything else like that can work, but still requires internet, makes it very challenging. It reminds me of some of the early fintech solutions we saw in Central Africa, where somebody could phone and ask somebody to place an order online at a time later. So you've got all these cobbled solutions together, but it makes it incredibly difficult. For us, our realistic situation is people go into banks, and we've trained bank RAs to take down an application and contact us. And that's really typical to the service necessary in places where internet is not so available, in order to give them some sort of digital access until the situation resolves. Truth of the matter is, places like Cameroon have 3 fiber optic lines and they don't use all of them. So I'm hoping that one day that question will not be necessary, but that's the approach we've taken.
Thank you very much, Viola. Thank you very much, Misha. There are several other questions and comments, but I appreciate that you have given us these beautiful presentations and also your answers to the questions posted. Now, we have only 3 minutes before we need to wrap up, and I would like to first ask our colleague, Ms. Tatiana Krylova from UNCTAD, to give us some closing remarks, and then I will come back to you. So, Tatiana, if you are ready, your views are always important for us. Please take the floor.
Yes, thank you, Alex, and of course, thanks to all the panelists and participants as well for this excellent and very thought-provoking and actually practically useful discussions on the role of fintech in the MSME resurgence. That really was very enriching and informative session. So just to say that fintech really is, we can see, we heard and discussed that fintech is the front edge development, in using digital technology to facilitate access to finance and to benefit from the financial services. However, I would like to say that high mathematics always starts with a multiplication table. And in this regard, the financial literacy of participants of these participants of the use of this technology really starts with financial literacy and understanding of some basic issues to prepare some even simple financial statements, which are really critical to get any finance, whether it would be traditional form of access to finance or through fintech. So that's really very important, and I specifically mentioned that because, as I already said in previous webinars, UNCTAD is working towards this issue, developing a number of tools to facilitate financial literacy in the MSME sector. So we develop guidance and training materials and delivered number of training activities on accounting for the SMEs. And it's really, it's actually quite interesting to see how high is demand for that type of information and that type of training. And so we're also developing an e-platform within other activities that we have, e-registration platform, we will provide also digital tools for entrepreneurs in the MSME sector through this platform, entering the data on financial, on transactions and activities to actually generate basic financial statements. So this is really the first brick in the whole universe of issues that we're discussing, but really a very fundamental, critical step to get it moving. So, but that's again on the part of some basic things related to financial literacy and access to finance. And knowledge of all these instruments that we discussed today is really of paramount importance also to bring this information to the recipients in the SME sector, how they can make use of it and how they can improve their businesses. So that's really very critical. And again, I would like to thank for all these contributions that we heard today. And again, thank you, Alex, and your team, Julia, for great cooperation, so that really makes possible to bring all these useful guidance to participants. And we look forward to our further cooperation. Thank you very much.
Thanks to you, dear Tatiana. Thanks to the colleagues at UNCTAD, to Philippe, particularly, yes, to my team, to Julia, particularly. And before we go in these 10 seconds, I guess, that we have, dear participants, thanks to you all. This wouldn't be possible without your support, without you registering and actually staying until the end. We started with 177 persons, and we have more than 130 after 2 hours. My respect to you. But I want you to go knowing that there is a wealth of knowledge in the United Nations system, not only at UNCTAD, at UNITAR, and very many other agencies, but particularly at UNCTAD. Use your internet, use your search engines, and go and read on the publications that this beautiful organization has. Join the webinar that we have. Tatiana just announced that there will be another webinar at the end of May. So we are here to help. And again, the last phrase should be also the first. This is because we have to get ready, and we have to get ready soon for what should be the post-COVID resurgence. You are part of that recovery. I am part of that recovery. We all are, and we have to do it together. With that positive message, thank you again. On behalf of UNCTAD and UNITAR, it's been a pleasure. This webinar has ended. Have a good day. Bye-bye.
Thank you. Thank you.
Thank you.